Looking back at that draft, you're right. It leaned on a lot of stock YouTube host filler. Here's the thing, let's unpack. Honestly, the big story this week is, and some phrasing sat too close to the structure of the original source material. Let me rebuild this with a sharper, more specific hook and genuinely reworded analysis throughout. Welcome in headline, 3 coins, 1 Fed chair, and a number that's been sitting in extreme fear for 2 straight days. Welcome to XRP Future Finance. Today we're talking about why Bitcoin, Ethereum, and XRP all clawed back some of their losses, even as bets pile up that the Fed is about to get a lot less friendly toward markets. The headline says, Crypto Today. Bitcoin, Ethereum, and XRP pair losses on increasing bets of Fed tighter monetary policy, and there's a lot packed into that one sentence. Let's get into it. Thursday's price action told a story of a market trying to find its footing after getting knocked around. Bitcoin slipped lower but kept its head above the $64,000 mark. Ethereum got squeezed into a tight box, fighting for footing between $1,700 below and $1,800 above. XRP took the hardest hit of the three, dropping beneath that $1.20 line that traders have been treating like a wall for weeks now. None of this happened in a vacuum. It all traces back to one room in Washington, and the man now running the meetings inside it. Wednesday's Federal Open Market Committee decision itself wasn't a shock. Rates stayed parked in the 3.5% to 3.75% range, exactly where the market expected them to land. What moved the needle was the press conference afterward. Kevin Warsh, stepping up for his first outing as Fed chair, didn't waste time easing into the job. He went straight at the 2% inflation target, framing it as something the Fed has chased for years, and something monetary policy, not luck, not external factors, is supposed to deliver. That kind of directness from a brand new chair is the sort of thing markets sit up and pay attention to. And the timing couldn't have landed worse for risk assets. Inflation numbers from May came in hot, hitting a 3-year high, with oil prices and the ongoing Middle East situation doing a lot of the damage. So you've got a new Fed chair talking tough on prices at the exact moment inflation data is giving him a reason to follow through. Put those two pieces together and you get exactly the kind of nervous energy that's been running through crypto charts this week. The betting markets back this up with real numbers. Odds of a rate hike at the next Fed meeting now sit around 30%, up from almost nothing just months ago. 70% still expect rates to hold steady, so a hike isn't the base case, but rewind to January and virtually no one was pricing in a hike at all. That swing from not on anyone's radar to a real possibility is a meaningful shift in how traders are thinking about the rest of the year, and it's been weighing on Bitcoin, Ethereum, and XRP in equal measure. On a separate but connected note, there was actual de-escalation news out of Washington late Wednesday. President Trump and Iran's President Masoud Pezeshkian signed a memorandum of understanding aimed at ending the conflict between the US, Israel, and Iran. That's a genuinely significant geopolitical development. But Iranian officials were careful to temper expectations, making clear the country isn't simply resetting to where things stood before the fighting started. They've already signaled plans to begin charging transit fees on vessels moving through the region once a 60-day toll-free window built into the agreement expires. Put the Fed talk and the geopolitical news together and you get a market that's clearly still rattled. The Fear and Greed Index sits at 15 on Thursday, extreme fear territory, down from 22 the day before. That single-day drop matters. It tells you sentiment isn't just low, it's actively getting worse, and traders are responding by stepping back rather than stepping in. Now let's get into the charts, starting with Bitcoin. Price is holding above $64,000, but it's still trading underneath its 50-day, 100-day, and 200-day exponential moving averages, a setup that keeps the broader trend capped no matter how the daily candles look. There is a quiet positive here though. The MACD histogram on the daily chart is staying in positive territory, and the money flow index is parked just under the neutral 50 line. Translation: there's some underlying strength building, even if it hasn't broken through the ceiling yet. For Bitcoin to really shift the narrative, it needs to climb through a stack of resistance. First up is the 50-day EMA near $70,062, then the 100-day EMA around $72,838, and finally the 200-day EMA near $78,241. Clearing all three would mark a real change in tone. Fail to hold current levels though, and the parabolic SAR support near $62,149 becomes the line in the sand. Lose that, and a deeper slide opens up. Ethereum is wrestling with a near-identical setup. Sitting around $1,747, ETH remains boxed in below its 50, 100 and 200-day EMAs, which are clustered together roughly between $1,946 and $2,375. That tight grouping above price is exactly why ETH has struggled to break out. But the MACD histogram staying positive, paired with an MFI reading just under 50, suggests the selling pressure may be running low on fuel even if it hasn't fully reversed. The path higher for Ethereum runs through the 50-day EMA near $1,945, then the 100-day EMA around $2,103, and the 200-day EMA close to $2,375. Clear that stack, and the bearish pressure starts to genuinely ease. On the downside, the parabolic SAR near $1,603 is the support that matters most right now. A break below opens the door to the next leg of this slide continuing. Then there's XRP, and this is where things get a little more concerning. Price is holding just above $1.17 after losing the $1.20 level that it held for a while. The bigger tell here isn't the price itself, it's what's happening in derivatives. Futures open interest dropped to $2.66 billion on Thursday, down from $2.79 billion the day before. Falling open interest during a price decline usually means traders are closing out positions rather than betting on a bounce, a sign that confidence is thinning, not building. XRP's technical picture mirrors the other two majors. Price trapped below the 50, 100 and 200-day EMAs, all fanning out above current levels and capping any near-term upside. The one thing working in XRP's favor is that the MACD histogram is still holding above its zero line, hinting that the selling pressure, while still present, may be starting to lose its grip. If XRP is going to mount any kind of recovery, resistance starts at the 50-day EMA near $1.28, followed by the 100-day EMA around $1.37, and the 200-day EMA closer to $1.58. On the support side, the parabolic SAR near $1.08 is the level to watch. A clean break below there, with the money flow index still sitting in the middle of its range, would leave plenty of room for further downside before buyers have a reason to step back in. Pulling it all together, this is a market caught between a Fed chair who just made his hawkish intentions known on day one, inflation data giving him cover to follow through, and a geopolitical backdrop that's improving but still fragile. Bitcoin, Ethereum, and XRP are all showing small signs that downside momentum is fading, but none of them have actually broken free of the resistance stacked above them. Until that changes, the smart move is watching these levels rather than guessing at the next move. That's where things stand today. None of this is financial advice, just a breakdown of where the charts and the macro picture line up. If this kind of analysis is useful to you, stick around on XRP Future Finance, and we'll see you in the next one.